Subramaniam joins us now. Let's take our conversation forward and understand what he makes of the current environment. Vetri, good morning. Thank you for joining us. Uh,
Morning, Nikunj.
what should one do when you get up in the morning after you are finished with your prayers? Look at global markets and make a view, or look at Indian markets and just not get confused? Because every morning I ask this question to myself that why India is outperforming and how long will it continue?
Well, my recommendation to most investors would be that you should not be watching the screen and prices every day to determine what you should be doing. You should be executing as your plan. If the prices show up at the place that you wish to transact, that is when you need to act. So, reacting to prices on the screen is the wrong way to go about it, is what I would. Would be my answer to your first question. On the second part, I mean, without doubt, there has been significant degree of outperformance by India. If you go back all the way to December 2020, the markets are still up from that point of view in India by 20 plus percentage. Whereas if you look at the U.S. markets, you look at the All Country World Index, you look at emerging markets, everything is significantly negative. So I think outperformance is not just something that you're seeing day in day out. It's actually something which has now played out over the period of literally the past 1.5 coming up to almost 2 years. I think it reflects in some part the superior, macro fundamentals that India has on a relative basis. This phrase was used many years ago in the GFC, and today India sort of qualifies as the cleanest shirt in the laundry. Everybody has problems. Our shirt is just slightly cleaner than the rest. So I think that's certainly been a bit of support for India. And we can talk about some of those macro details at more length, but I think outperformance by India is a function of the better macro. It's a function of the strong earnings growth that we've seen. But over I would say just the last 12 months, if you see, the markets are flat, and I think that's an outcome of the fact that valuations were challenging a year ago.
Are valuations still challenging given that globally interest rates will move higher? Slowdown, I think, is imminent, and the fact that we are trading almost at a 50, 60, 70, even 100% premium depending on the brokerage report you are referring to?
Yeah, I think that's an excellent question, Nikunj. Now, I like to look at a range of indicators to sort of see what the markets are indicating, be it price to book, be it trailing P, be it forward P, be it the dividend yield, and also look at how stocks are trading compared to bonds. Now, if you look at most of these, the market is still trading slightly above long-term average valuations. It's not blinking red. It's certainly in the comfort zone, but yes, it is still trading above average. And when you do the comparison that you mentioned, Nikunj, which is to compare it to other EMs, then that premium has certainly gone up quite dramatically. So I think we need to be careful about two things. One, at these kind of valuations, we still think a sort of staggered approach in the case of investments in India is still a strategy you can continue to use because you're sort of in that comfort zone. You aren't bargain basement cheap to sort of get aggressive, but in that comfort zone, staggered investments would work. But it's only an argument in terms of outperformance. If really one were to say, is the market attractive in terms of being valued cheaply? The answer is no. Also, if I were to compare where Indian equities are trading relative to Indian bonds, so we are sort of doing an inter-asset class argument, then, with bond yields having hit 740 on the 10-year bond, actually, when you do an inter-market comparison, equities are sort of neutral at this point of time. They aren't really looking particularly attractive.
Okay, fair enough. That's the view coming in on the overall valuations, comparing it to bond yields as well as versus some of the other emerging markets at the current juncture. So Vetri, what would be the outlook in terms of how you've seen the story for banks play out? Do you believe that yes, there are still a lot of concerns when it comes to the overall credit offtake, NPA concerns, asset quality, or that we're on a strong footing and the outlook is by and large bullish?
Sure. Just one quick point to make here to, sort of set the context. The health of the banking sector, or certainly I would say, let's say the top 6, 7 banks in the country, this is the healthiest that we've seen them in almost going back in my memory to the early 2000s. So this is the strongest banking sector in terms of balance sheets that we've had. We are seeing significant consolidation of market share. Remember, incremental market share of loans was already showing up very dramatically in favor of a select 5, 6 banks. Increasingly, what we are seeing is that even deposit market share is tending to pivot towards those 5 or 6 names. Now, the reality is that when you look at the longer term structural story, credit to GDP in India still remains very low. And I think there's a secular opportunity for credit to grow as the economy does well. The bank balance sheets are strong. They have the ability to drive credit growth. And valuations are sort of off the basement, but still I would say, at the attractive level relative to growth prospects. So I think certainly financials over the next few years looks like a sector where you've got a very good equation in terms of potential growth, as well as what you're getting in terms of the strength of the balance sheet and their valuations.
Vetri, where is it that you're finding newer opportunities? Because the way to bet in any market is via stocks and sectors, right? Because till even about 6 months back, who would have thought that defense stocks, railway stocks, or even some of the auto names and select pharma names would be sitting at life highs?
Sure. I think it just comes back to always taking a look at what's doing badly, where valuations have sort of come down to an attractive level. Equally, looking at it from the point of view that have things become so difficult in the sector that you're actually starting to see supply competition sort of start to reduce. And I would say autos was a classic example of that a year ago. Still remains a sector that we are positively biased about, but obviously, we've seen some bit of a move over the last 1 year. I think to my mind, pharma still sits in that bucket where you've seen some improvement of the troughs, but I do think there is still some runway there because this sector has gone through a lot of pain over the last few years. I think some of the managements have done a good job of starting to put their balance sheet back in shape, clean up some of the acquisitions they had done in the past. And what we are seeing now is a focus with most of these companies where the critical issues they're talking about is how will they deploy capital going ahead? What's the sort of target in terms of raising return on capital? And as far as the growth opportunity is concerned, what I would say is that the Indian domestic pharma opportunity still remains very, very attractive. It's unfortunately a fact of life that as incomes go up, unfortunately, because of more pollution, because of more stress that people are experiencing, because of more factors in the environment that they are exposed to, you see the rise of chronic conditions. And chronic conditions means a lifetime of medication, which is very different from antibiotics, which is 5 days and you're done. So, this rise of chronic conditions, which unfortunately is what we call lifestyle diseases, actually plays into the, opportunity for the pharmaceutical companies. So we are quite positive about the domestic pharma opportunity. And, I think the good managers have refocused on growing their domestic business, and that bodes well for them.
Let's understand IT, Vetri. I'm going to quote something which I learned from Manish Chokhani. It's not my original. I will not claim it. In the world of abundance, scarcity does well, which is why .com, NEFTs, everything which has got to do with scarcity, whether it's a movie or a painting, has done rather well in post-COVID. But in the world of scarcity, productivity will make a comeback, and that is where we are headed. High interest rates, demand squeeze. So Indian IT companies, in a sense, are a play on productivity. Don't you think they will do well? I mean, markets are throwing these stocks away as if this is a repeat of 2008.
No, I think great point, Nikunj. Look, if you look at the entire Indian corporate sector, it's very hard for me to point to any sector where we have a bunch of companies who have proved their global competitiveness through multiple business cycles. We've seen how they went through the 2002 difficult period. We've seen how they handled the GFC, and they've still managed to run their companies as strong cash generating companies. They're actually returning cash to shareholders hand over fist, and they are continuing to grow quite well. I think the only challenge in IT was that if I go back a year, to September, October of 21, honestly, I have to go back 10, 15 years to, jog my memory and think when it was that the IT sector traded at valuations similar to the kind of expensive valuations we were seeing then. I think it's been a gradual descent now in terms of valuations. We are starting to see some of them come back gradually towards what we think is an attractive zone, but it's still not really reached a point where I would say the valuations are now giving me the comfort to go in. But I think the point you make is very, very important. You know, eventually what really makes money for you is the ability of that business to seize an opportunity and convert it into cash for shareholders. And I can't think of a sector, any which demonstrates this better than the IT sector, where we've had some fantastic managements do this over 10, 15, 20 years. I think the growth runway is still there. I'm just waiting for those valuations to give me some more margin of comfort.
Sure, makes sense. Vetri, always good to have you on the show. Thank you so much for taking the time out.
Thank you.